The mood about the European economy has been generally downbeat recently. But the question is whether that's completely called for. Recent data that we've seen come in over the past week have actually shown some signs of green shoots about the economy. Let's take a look at whether a Goldilocks economy may be emerging. The PMI for the eurozone actually came in better than expected. We saw that services was above 50 again and increasing, which corresponds to growth and activity in the sector. And businesses are becoming more upbeat about the coming months. For manufacturing, we still see that it's in decline, but we see that the pace of decline in new orders and production is getting smaller by the month at this point. Then, if we look at inflation, we see that recent inflation numbers have remained benign. For March, we saw inflation tick down from 2.6 to 2.4%. We don't expect the ECB to cut rates in the April meeting already, but we do expect that this adds to our thoughts that a June cut is very much in the making at this point. All in all, if we look at whether this really is a Goldilocks economy, that might be overstating things a bit. We still are an economy in Europe that's in stagnation, but we see some green shoots emerging and a relatively weak but sure recovery is likely to happen over the second half of this year. And with inflation looking quite benign, it's actually not going so bad in Europe as headlines sometimes may make you think.